Good afternoon, everybody. Here we are, Monday, 27th of May 2019, for session 40 of the Admiral Markets webinar series, Mastering the 4 M's of Trading. And thanks for joining us this afternoon. I hope you can see the screen, hope you can hear my voice. My name is Paul Wallace. I'm your guide for this Admiral Markets webinar series. I'm a trader, analyst, and coach. And as always, I just look to begin with a quick risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risks involved in trading. This presentation and the accompanying videos for information and educational purposes only. Online educational materials are developed by Admiral Markets and distributed by Admiral Markets Group investment firms for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. Presentation and accompanying videos should not be taken as advice for investing, as they only represent the personal opinion of the authors. As many of you will know by now, as of August 2018, the regulation within the European Union differs for retail clients and professional clients. In our presentation, we use demo trading accounts where all clients can still use a high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional trading terms. Retail clients benefit from unlimited negative balance protection. Professional clients at Admiral Markets UK receive a compensation of account deficits with a maximum payout of £50,000 sterling as per our negative balance protection policy. As always, ladies and gentlemen, we'd like to talk about the advantages of trading with Admiral Markets. As you can see there, for two of their most popular trading instruments, the DAX 30 and the Euro Dollar, we have offer very competitive spreads, and also we offer both the MetaTrader platform in both MT4 and MT5 guises, with also the Admiral Markets Supreme Edition plugin. And Admiral Markets is a truly global brokerage with a global offering that is regulated in several entities across the globe. And if you wish to speak to your account representative, they'll be able to guide you to help choose the best entity for you to trade with. As always, ladies and gentlemen, those of you who've joined us or been watching the series in the archive section, that as always, I like to set our expectations for the sessions, that it's here for me to educate you about the 4 M's of trading, so you can go away, begin to analyze any market and be ready to trade it, and help you raise your own self-awareness about managing risk and about managing yourself. As always, I appreciate we've got a broad range of experience, and we're under the time limitations of 40-odd minutes. So sometimes it limits me in terms of the depth that we can go into in certain topics. So we'll always focus on tools that you can take away and utilize tomorrow in your own trading endeavors. And, you know, throughout all of the series, what we've talked about in Mastering the 4 M's of Trading, it is about understanding these 4 M's: markets, method, money, and myself. Because invariably, when a trader understands them and actually masters those 4 M's, that is when they tend to be in that sweet spot where they're actually trading in their best ability, and that's what all traders are striving to achieve. But also not only striving to achieve, but also striving to maintain. So, you know, as our session will start to run to a close here for the Mastering the 4 M's webinar series, we've got a few weeks left here, and what I want to do is to sort of help us draw a conclusion to the series that we've covered here over the last sort of 8 or 9 months. You know, and what I'm going to be doing over the next few, the next 2 or 3 sessions, is drawing off 4 M learning points from this series, and based on what we've covered over the entire range of months of us talking together. So, you know, if you notice, we've talked about the last few sessions, we talked about how to prepare for our trading day. Well, that is all about that 4th M, about managing myself. We also talked, you know, a lot of the time we focus on how to follow the 10 steps that we've gone through in our session. That part is about, you know, that is the 4 M's in total, but also it's about, you know, myself having the sort of the discipline to be able to focus, follow the process, because that's invariably where good trading comes from. We've also covered about, you know, how we do our market analysis. It's almost in a very simple process-based way to do it. that helps us master that the first M of market. We've talked about various entry methods. Okay, that covers the method. We did quite a lot in the series on how to manage our risk, which is all about that third M of managing money. We've talked about how we record and review our trades, which is once again about managing myself. And in the last, in the last session last week, we talked about what can we do to help manage and maintain and improve our trading performance, which is about that trading myself. So hopefully, as you've either you've joined me during the series or you've been watching this on a sort of almost like catch up in the on the YouTube channel for Admiral Markets, or on the Admiral Markets global page on the sort of on Facebook. Hopefully, as you've been going through this, you'll start to realize, okay, that all of these elements that we've talked about and covered, they all fit nicely within these 4 M's of trading. Okay, markets, method, money, and myself. That's exactly where we sit. And all of the sessions that we've talked about have been sometimes just focusing on one element or two, or on some of the times the sessions have been focusing on actually managing quite a few of them within one particular session, because not unsurprisingly there's a fair bit of overlap. So, just very quickly, what we're going to do is go through what we've touched upon. Okay, so the last couple of sessions we talked about how we prepare for our trading day. Right, start of the day, we talked about things we could do pre-market and what we look at during the market opening, and we'll touch a little bit in the next session or two about what we do on the post-market. If you remember, what I wanted to sort of get across to you is about, you can actually choose to help develop your own trading performance. And one of the ways you can do it is to remember a very simple mnemonic of plan, execute, and review. You probably already know this. Some of you might, include part of it in your own trading, but I can assure you, just being able to make sure that, you have a process and that you can plan, execute, and review your trading will help drive you towards your next evolution as a trader. That will help you become the best trader you possibly can be. So if you remember, we talked about, okay, we've covered a lot of it, but I just wanted to stress once again is that if you're looking to trade your session, let's say if you're an intraday trader or even a swing trader, we talked about it's important for you to be at your desk 30 to 60 minutes before your particular session opens, because it's your business. You need to take it seriously. Okay, I want you to show the market some respect, show your trading some respect, and show your capital some respect. And we talked about that in great deal of detail over the last 3 or 4 sessions. We also did a bit of an exercise about sort of understanding what type of trader are you, and we went through all these particular questions, with the whole idea being to try and find out what type of trader are you, because the more clarity you have on what type of trader you are, the more able you are to make good trading decisions and make and help your development as a trader. So as we've said, if we've not been in, we covered it a bit more in detail in the last couple of sessions, but even just taking a snapshot of this particular screen and then just challenging yourself to go through and find, identify what type of trader are you, it will help you develop as a trader. Last session we talked about, I wanted to talk about how this great quote from Paul Tudor Jones drives good traders, and including myself. And when he talked about how profits come from happiness, not the other way around. So now I spend my days making myself as happy as possible. It's a great quote from Paul Tudor Jones. Not everybody really fully understands or gets it, but the longer you trade, the more you'll realize this. And if you remember the last session, we talked about all of those things that you can do to help manage your trading performance, help put you in a good space, help keep you in a good space so that you can trade, as well as possible. We talked about, looking at how, you can, one of the things you can do is to help you, get yourself a mentor, okay? Because everybody needs one. I've had several during my trading career, okay? And now I have a couple of very long-term trusted trading advisors who, I've known for many, many years, who I can bounce ideas off, bounce my own particular trading thoughts off. And that doesn't matter whether you've been trading for 2 weeks or 2 decades, okay? Everybody needs to have a good network around them, all right? And everybody needs their own little Yoda or their Mr. Miyagi, okay? And that can be in a formal or an informal, okay? It's up to you how you do it. But I can assure you that the one of the best ways for you to make the sort of progress that you want in your trading is to have someone there who can basically help you, guide you, provide an element of accountability, keep you on the right track, and stop you from making too many foolish mistakes. You know, and as I said, you know, everybody talks about getting a mentor. Everybody talks about it in the sense of, you know, people know that they should sleep more, they exercise more, watch less TV, drink less alcohol, eat more fruit and veg. We all know we should do these things, but it's actually having a good mentor that will hold you accountable to actually making sure that you do the right things, whether it be in your life or whether it be in your trading business, right? And as I said, that can be formal or informal. There are lots of trading meetups and networks, okay? You'll actually see, you know, even on some of the Admiral Markets webinars that we run, there are some really fantastic people who join the sessions and can contribute. You know, there are people there and stuff that are actually, you know, very, very good, very, very helpful. And everybody needs that little bit of help in developing and evolving their skills as a trader. We talked about, you know, we talked actually about quite a lot in terms about managing self, but one of the things I wanted people to take away was about helping yourself work on building resilience. That was really key. And we talked about how can you do that? Well, you focus on the quality of your decisions rather than the outcome. When you're a new trader, you focus on the outcome of your trades, okay? We become very, very attached to them. So when the trades win, you know, we're feeling on top of the world. When the trade struggles, okay, we're feeling in the pits of despair. You know, but that's actually not any way to sort of conduct yourself as a good trader. What you're actually looking to do is focus on the quality of your decisions. Remember, we talked about that is, you know, if you plan your trade your plan and manage your risk, and that is good trading. You know, that's good trading, that's a good trade plan, regardless of the outcome, because anything can happen once a trade has triggered. We talked about, you know, in terms of, you know, managing yourself, we talked about in this great quote from Brett Steenbarger, the American trading coach, how self-confidence is not expecting the best, to knowing deep inside that you can handle the worst. And, you know, and that, you know, although Brett here is he's a trading coach, that might be said that that goes for anything in life, all right? But it's very true. It's very true. It's about, you know, knowing deep inside that you can handle the worst, all right? And it makes it easier to handle the worst if you're exercising very, very good risk management on your trades. That makes it much, much easier because you know that even if you make a mistake, that actually, you know, it's just a small mistake. You can learn from it and you can come back next day and be a better trader. And all of us have to work with that. So, you know, what we talked about is, you know, preparing for that trading day before you even switch on your computers, all right? I know we talked about how it's part of your process. So it drives you to be disciplined, all right? It's much easier to be disciplined when you have a process to follow. It forces you to be still, okay? It forces you to be present and in that, in the moment. Because when you are present and in the moment, that is the opportunity for you to, you know, to sort of enter the trading zone. Forces you to reflect upon yourself. Remember, we talked about that, building self-awareness. And I've talked many, many times, if you see any of the sort of trading presentations I do, I talk about the sort of three traits that keep coming to the fore about good traders are that they have process, they're disciplined, and they have good self-awareness. These three things keep coming to the fore time and time and time again. And this whole, you know, Admiral Markets Mastering the 4 M's of Trading webinar series has been about helping you develop your process, which allows you to be disciplined, and helping you build your self-awareness about your behavior as a trader, all of which will help you in developing. You might not realize it today. You might actually take 2 months, 3 months, 2 years for it to actually come to understand it. But I can assure you, okay, if you can follow these sessions, okay, follow the steps that we've talked about, all right, have a little process of your own, driving you to be disciplined and making sure that you record your trades and review them, they will all help you build your self-awareness and help you, help you be the best possible trader that you can be. And that has always been my my aim for these sessions, to help you be the very best trader that you possibly can be. So, you know, we talked about, you know, a few sessions back about the sort of different types of markets. We looked at how we'd set up profiles on the Admiral Markets MetaTrader platform so that you're able to sort of have a little bit of process to follow that. We looked at, you know, the dollar index, and we looked at all of those 28 major pairs. Those of you who want to see it in action, I always say, you know, join me. I think this is the last week of the real-time daily trading ideas, but, you know, Tuesday, 10 o'clock tomorrow, I'll be there, you know, just doing my normal market analysis, talking about my method, all of which we've covered in these sessions, all of which is, you know, just having my own process, showing my discipline, showing how, you know, what I talk about in these sessions, I do myself day to day in my own trading, and how you can utilize that to, you know, to help you understand and develop yourself as a trader. We looked at, you know, FX pairs, okay. We also talked about, you know, having a nice watch list that included some of the major indices, some of the major commodities, Also, some of the interesting equities, okay, not only just FANGs, but some of the other ones that are A, in the news, and B, available to Admiral Markets clients. And also, not surprisingly, you know, having been rather quiet and dull markets for about a year, just over a year, in the last month or so, we've started to see the crypto market start to wake up again. Okay, and that has provided opportunities, and Admiral Markets provide a range of cryptocurrencies that you are able to engage with. So we talked all about that over the last, a few sessions ago, okay, about building those profiles, getting into having a little bit of a watch list, being able to sort of utilize that to go through the sort of steps, the sort of 10 steps that we've focused and talked about throughout Mastering the 4 M's of Trading webinar series. So, you know, if you remember, you know, this is what we've talked. I want it to just be almost like automatic to you, okay? Almost like it's automatic, almost that you can just, you know, even, you know, 2 years from now, you could actually just go through these 10 steps quite easily. And, you know, we'll do these first parts, okay, in this session, and next week we'll do the back 5, okay, as always. Remember it. Step 1, whenever you open a chart, define levels of support and resistance. Step 2, define if there is a trend in that instrument. Step 3, if there is, well, let's see how price reacts at those key support and resistance levels. Looking for a confluence event. Step 4, look for particular price action signals, okay, at support and resistance levels. And step 5, just be aware, you know, are they part of a bigger chart pattern that may be forming? Remember, that was the front 5, okay? Just simple, easy process to follow, okay? Whenever you open a chart, regardless of whether you're a 5-minute euro-dollar trader, whether you're a 4-hour gold trader, whether you're a monthly copper trader, okay, it should be just the same simple little process you can follow time in, time out. And then, you know, we had the back 5, which we'll cover a bit more detail in the next week, but we always want to know it, okay? Step 6, Step 6 is a risk. Define your risk, accept it, and stick to it. Step 7 is your reward. Okay, you're going to use a target, or you're going to have a trailing stop, and always know your exit. Step 8, you know, keep scrupulous records. Keep the data from your trades so that in step 9, you can review, you can improve your performance by debriefing your trades, learning what you can, getting better. And then step 10 is about repeating, all right? Repeating the 10 steps, because consistency and discipline are key. It's easy to be disciplined when you're consistent, and it is easy to be consistent when you're disciplined. They kind of tend to reinforce themselves. So, you know, remember, ladies and gentlemen, right? Step 1, define levels of support resistance. Whenever you are opening a chart, I want you, okay, on the monthly, the weekly, and daily charts to look at and draw in horizontal levels of support resistance. You can also add in big psychological round numbers that you may see as well. You know, and for new traders, you know, we can use the fractal indicator, which is you know, available on both the MT4 and MT5 platform, and can help draw new traders' eyes towards where particular levels might be of interest, and we want to make sure they are annotated on our charts. Step 2 is, remember, you know, we define if there is a trend, right? And I say it every week because I want it to be automatic for you. Okay, you know, if you know, good trends leap off the chart at you, all right? Okay, you're just using simple, you know, simple structure we talked about in terms of making higher highs and higher lows for an uptrend, or price being above the sort of the 50 and the 200 period moving average. That was another way that we could identify and make sure that we're, you know, identifying when we're in a particular uptrend. But it should be quite simple, all right? You know, this chart's very simple. You can see it, DAX 30 on the weekly chart over on the bottom left. You can see that price is congested, okay? Price is range bound, but then it breaks and then it goes, right? You can see it breaks and it goes, then it sets off in a very nice uptrend, and we can see that there are higher lows there all the way, and that's, you know, it's very simple, and I say it all the time. Good trends leap off the chart at you. Don't force it. If you feel as if you're forcing it, as if you're having to really sort of, you know, sort of scrutinize the chart, then I can assure you that the trend probably isn't there, ladies and gentlemen, right? Keep it nice and simple. Step 3, wait to see how price reacts at those key support and resistance levels, right? And that is all about confluence, right? You hear me talk about it week in, week out. Confluence of events, okay, is several things coming together, okay, at one particular time and place. We're looking for, say, between 2 and 4 things all to come together to help us, okay, identify the opportunity for a possible trade setup. And then step 4, well, we're looking for price action signals, all right? We spent, many weeks going through each of these individual setups. I know people love a setup; they love to take a setup, and we'll touch upon these. We'll touch upon these more today, okay? As as we draw our series to a close, okay. Everybody likes to have a quick reminder of how we looked, and for those particular price action signals. If you remember that, we talked about, a pin bar. It's a very popular, it's a very simple, it's a very visual pattern. All right, what we're looking for is a pin bar to have, it's open and close within the previous range of the previous candle. The candle wick, okay, should be 2 to 3 times sort of the length of the body. And then once I see a long nose that's protruding from all the other bars, and the better pin bars, they stick out and they're very obvious, okay. And what we're looking for is, that step 3, we're looking for pin bars to happen, at particular levels of support resistance, maybe at a big round number, maybe at a horizontal level of support resistance, maybe at a dynamic level of support resistance off one of the moving averages. So, once again, we've got a confluence. We've got about 2 to 4 things coming together in a time and place that allow us to sort of take a trade. We then also looked at, engulfing candle, and as I said, we did, individual weeks on each of these candlestick patterns. So, you can find them all in the webinar archive. Okay, they're, as I said, they're on the Admiral Markets YouTube page or on the Admiral Markets Global page on Facebook. But the engulfing candle, as I said, they happen rarely, but they're high probability, and they are, once again, the clear ones stand out for you. They're very much a reversal pattern. Okay, we're expecting the candle to completely engulf in range, all right, the candle that preceded it there, all right. So they don't happen very often, but when they do, they're worth taking a note of, especially if it's at the end of a long trend. We talked about, how to trade pullbacks in a trend, a very simple little 3-bar reversal setup there that, that we discussed, okay, that, is looking for, define if there's a trend and look to see how price is a pullback to support resistance, very much as we would be doing normally. And then for a long trade, we need 2 seller bars followed by a buyer bar. And for short, okay, we'd need 2 buyer bars followed by a seller bar, all right. So that's once we've, identified the trend we're operating in. And also what we're looking for, for, let's say, for a simplistic long trade, we're looking for 2 red bars followed by a green bar. But if the green buyer bar is something like a pin bar, an engulfing candle, or an inside bar, or a spinning top, that gives us more confidence. That's what we were actually looking for. That's, that's what kind of makes us happy. We also looked at inside bars, all right, okay, where the high and the low of the bar is fully within the range of the preceding bar. It's pretty much the exact opposite of the engulfing candle. And I talk about it always as about thinking of it like an organism breathing, okay, surge, then rest, then surge again, right? The inside bar is the rest. And as always, we're looking to catch the next surge. That's what we're looking to do. They think of it as the inside bar as the rest, and we're looking to catch that next surge, all right. And you can see here in this particular example, we're in a downtrend and price has a bit of a pullback, and we have 2 green bars followed by a red bar, and the red bar, seller bar, is also an inside bar. So not only we have an inside bar, but we have a 3-bar reversal there as well. So we can see that there's a few nice things going on there that it's that confluence of events. Remember, there's a few things all coming together at a particular time and place that allows us to to effectively make a good trade decision. So, what we looked at is we talked about, ideally trading them as pullbacks and trends, all right. And, if you're a longer term trader, we looked at, using the weekly and daily setups and perhaps using 4 hours to execute and manage. And, you can decide on the entry on the break of the bar or break of the range, okay, the preceding range of the mother bar, depending upon the size of it. And we just said, just be aware of perhaps false breakouts. So just keep an eye on it. We also talked about how they can be used in true breakouts. So, we wait for a breakout to occur, then wait for an inside bar to be printed after the breakout, and then you're looking to trade in the direction of that breakout. And that is, a well utilized and very solid trading tactic when we get true proper breakouts. So we also looked at key day reversals and momentum reversal candles as particular setups that you could utilize. All right, remember, key day reversal is a sharp reversal pattern that occurs, at the end of an uptrend. In an uptrend, prices open, equivalent or above the previous day's close, makes a new high, which is an important part, and closes beneath the previous day's low. That's very important. And then a downtrend, prices open equivalent or below the previous day's close, makes a new low, so push to new low, and then reverses and closes higher than the previous day's high. And that's the key element. And not surprisingly, the greater the price range and volume on the key reversal day, the more reliable the signal. We also talked about is momentum reversal candle, which is a kind of a version of the key day reversal. In an ideal world, we like trading key day reversal. We don't always get it, but however, key day reversals don't happen as often as we'd like. So a version of it appears more frequently. It's called the momentum reversal candle, right? So for let's say for a weekly or daily candlestick chart, or 4 hour beneath, for a buy for a trigger day essential, price is in a downtrend, price makes a new low, okay, bar 2 there, but it closes higher than the previous day's close, okay. A key reversal would close previous than the previous day, higher than the previous day's high, but a momentum reversal it closes higher than the previous day's close, all right. Also, the low is lower than the previous 3 to 5 bars. Okay, so it's not as strong as a key reversal, but it can still be a valid setup if we have a good confluence of events. Okay, if that momentum reversal candle also happens to be something like a pin bar or an engulfing candle, or is happening at a particular level of support resistance. Once again, getting confluence of events happening, ladies and gentlemen. That's what we're always interested in seeing. We talked about, in terms of a reversal idea, we talked about the power of 20, okay, PO20, sometimes see me draw that on my charts. And this was about, recognizing, the confirmation of a reversal pattern. So once a market has printed a reversal pattern, so in this particular example, we can see that it prevented a double bottom. We can use the 20 period moving average, which is the blue period moving average on our charts, as confirmation of that reversal. So we watch to see how does a price react to the 20 period moving average after the reversal pattern. Does that 20 EMA provide dynamic support or resistance? And hopefully you can just see on that particular chart there, after we've got the double bottom, price rallies up, but then it comes back. But actually it can't close beneath that 20 period moving average. If we see the 20 period moving averages from being dynamic resistance, is now bottomed out, then it turns up. Okay, and then it becomes dynamic support. So we can't close beneath it. Also, the lows of the candles are getting higher and higher. It's just giving us confirmation that that reversal has occurred. Okay, and that we should be, if we've been short, we'd want to be out of it, or if we're been standing on the sideline, we're getting ready to enter the new particular trade. So, as I said, we're looking to see if that 20 moving average acts as either a new roof, if we're looking for shorts, or as a new floor for longs, all right? When it acts as a significant dynamic area of interest, then we can have confidence to trade in the direction of the reversal, that we believe that the reversal will continue. And that's what we're interested in. That's what we're looking for. We also looked at a very simple pattern called the 1, 2, 3. Very simple here. It is in a case of a standard bearish formation. People would look at where would you sell. Well, on a 1, 2, 3 is, as you can see, you've just got 0.1, 0.2, 0.3 never gets above 0.1. But very often, ultra aggressive traders might trade a break of the of 0.3. If 0.3 is a rejection candle, well then breaking that, something like a high test or a pin bar, then people will trade the sort of break at the bottom of it, because that will actually give them an ultra aggressive entry. Alternatively, people who are just trading the conservative entry might wait to trade the break of 0.2. Okay, once price trades beneath 0.2, that would be where they enter. Looking at some candlestick patterns, sort of a confirmation, okay, or a combination of them. One of the things we looked about was the 1, 2, 3 KDR combo. Okay, this was if once we'd seen a good trend, if we've seen the trend come to the end, what we'll be looking at, especially in the larger time frames, which is what we've primarily focused on so far on the Mastering the 4 M's of Trading webinars, is that after a good trend, take an interest when price prints an individual reversal candle on daily or weekly chart. could be a key reversal or engulfing pattern or a rejection candle. Ideally, I like a key reversal, okay, KDR, but you know that I don't always get that, but that's what I particularly like to see. Then the second part of it was then we wait to see you know, a 1, 2, 3 pattern form. That's what we're looking for. That 1, 2, 3, okay, the 3 also provides us a lower high. Remember, I'm not trying to pick exact tops. I'm not really trying to pick exact reversals, okay? I'm waiting for the market to play its hand. And so when I see that happen, that's when I start to get particularly interested. If I just draw on here, okay, let's just put on, I might make it a bit easier. So, you know, what we have here is, you know, we had a real big key reversal here, which also became 0.1. We'd then be looking at 0.2, and then when price comes up here as 0.3, that's what we'd be looking at, okay, which we can also see, okay, we've got also the, my drawing is terrible. We've also got PO20 going on there, okay, the power of the 20 period moving average is now moving, acting as a roof. So we've got, you know, a key reversal followed by a 1, 2, 3 pattern, followed by a power of 20. What we have is, you know, we've got confluence of events going on. Okay, we've got 3 or 4 things all coming together at one time and place that allows us to sort of, you know, to identify a particular trade setup. So, yeah, you can see it there, okay. What we want to see ideally is, you know, that 0.3 is a rejection or indecision candle there, okay. We can see that there after the 1, 2, 3 has been created, you know, and it's just, yeah, you can see it there quite happily, quite, you know, 3 there, okay. You can see it all there. Okay, so we've got that 1, 2, 3, which is what we're expecting is price now to drop, and so we'll be looking to trade the sort of the break of the 0.3 there. But you know what we can also say, as I said, you know, we've got the not only have we got the key day reversal followed by the 1, 2, 3, but you also might have the power of 20 happening as well as you do in that particular case. All that does is give me a bit more, you know, I'm happier in terms of my understanding of there's a confluence occurring, and what I want to do is to be able to sort of show that, you know, and it just gives me more confidence to get ready to take my particular trade in terms of the, you know, the new trend direction. So then, you know, we had we've just covered a lot there on step 4, but you know, step 5 was really about, you know, the general chart patterns and you being able to identify and understand when we're perhaps playing a bigger part of them. So, you know, we might have things like continuation patterns, like, you know, bull and bear flags, ascending and descending triangles and symmetrical triangles, and also reversal patterns, head and shoulders, double top and bottoms, triple top and bottoms, and also cup and handles. So, you know, we covered all of those in particular detail back on one of the sessions there earlier in the series. So, as always, feel free to go back to the archive and find that through there, and you'll be able to help you sort of help you, you know, develop your recognition of general chart patterns. So, you know, there we go, ladies. We've just sort of shot through quite a bit there, but you know, we're talking about, you know, the big picture recap was about, remember, it's important for you to manage to master those forms of trading: markets, method, money, and myself. Are they all in alignment? All right. When, you know, when you are, you know, when you feel as if you are in good control of your markets, your method, your money, and myself, that's when they're all in alignment, and that tends to be when, as traders, we tend to perform to our best. That's when we tend to deliver to our best, and that's what we're always looking for. So, you know, if you're having a bit of a challenge in your trading at the moment, well, then, you know, just try and identify which one of those 4 M's are you struggling in at the moment. The quicker you're able to identify, the quicker you'll be able to sort of find a solution and be able to work at that, and, you know, and attack that and improve your own trading performance. And as always, for all traders, you should be constantly monitoring those 4 areas, okay? Are you on top of them? Are you mastering them? Are there particular areas in there that you feel weak on? Are there particular areas that you feel that there needs to be some development? And that's absolutely fine. All traders need to develop. We all need to sort of get better at our trade, you know, which is trading. And that's okay. but we just want to be able to understand and manage that to the best of our abilities. So as always, ladies and gentlemen, if you have any particular questions about this session, whether you're watching it live or whether you're watching it later in the archive, as always, you can contact us. We always welcome the feedback and your thoughts. You can call us on the London number there, 02035140756. You can drop us an email at hello@admiralmarkets.com. You can look at this session, all the previous ones, on youtube.com/admiralmarkets. Or look up facebook.com/Admiral Markets Global, where you will find all of these webinar recordings in there that you can actually access and go through to on demand to your heart's content, and hopefully pick up all of the the many topics that we have talked about throughout this particular series. So we've got a couple of minutes left. So as always, just for a few minutes left, I'll go and have a look at a couple of just the recent charts. We've had an interesting couple of days here in the UK, so why don't we have a little look and see what that has actually profit up for us in terms of markets. So if you just bear with us a moment, we'll just switch across, and we'll just for the last couple of minutes, we'll just talk about the in particular what's been going on with the sterling and euro over the last couple of sessions. So here we go. Here we're on the, let me just move this out so we can actually have a look at some of these elements here. What we can see is this is a profile. Okay, we talked about setting these profiles up here. Or this is on the this is on MT4, but it doesn't really matter too much about whether it is on MT4, MT5. It's pretty much the same sort of standard practice that we've gone through. Just make sure we can see this. Keep our charts maybe not as clustered as possible. Here we go. All right, so here we have, it's a profile for British pound. That's what we're looking at here, and pretty much it's been a pretty torrid time for the British pound over the last few weeks. Okay, so as always, I've got a profile set up here: pound against US dollar, euro against sterling dollar. Okay, euro against sterling. No, my apologies. Pound against Canadian dollar here. Pound against the Australian dollar, pound against the yen, pound against the Swiss franc, pound against the Kiwi dollar, and also against the FTSE. And if we just look at pound against the dollar, okay, I'm just going to look at this as the daily chart. But if we look at this here, okay, we can see that what you can see is that pretty much like what we've talked about is a case of that this is the daily chart. But if we've gone out to the monthly chart, realistically, we would just literally be drawing in our levels of support resistance, the particular extremes where we see, hopefully you can see where the fractals there have been sort of showing up. And you can see, when we've got 1, 2, 3, 4, kind of 4 areas there, okay, that have just been showing up there. Okay, we had a couple of fractals here, another fractal there. Okay, just showing us, particular areas where markets were interested. Nothing particularly difficult. And as we go down to the weekly chart, we're just making sure we can see it there. We've already got that 120. Okay, so not surprisingly, a big round number here, 120 there. But on the other side, we've had 130 as well. That has acted as pretty significant level we can see as well. So that's on the weekly chart. And then if we go down to the daily chart, hopefully you can see that there, it's pretty clear that the price has sort of just drifted its way down there for the last for pretty much most of May. There we can see that actually it's just been part of a pullback in a bigger sort of downtrend. The trend has dropped away there. But interesting, we came down and we fell down towards this. We've hit this previous level of support, which you can see price is reacting it against. And if I go down to the 4-hour chart, okay, we can hopefully see that once again we've been in a particularly nice trend there. Okay, we were just in a nice downtrend there, just working away until we hit this particular level. There's actually a little bit of we had a little bit of a move back there, and of course what we've had in the UK over the last couple of days is not only have we had Theresa May's resignation, okay, on Friday, the last Friday just gone, but we also had the European parliamentary elections. There was a good result there for the Brexit party, okay, and what we can see is we've been in a downtrend here, but you can hopefully see there, step 5, that's as it's a flag pattern that we've had actually showing there. We like to have a flag pattern that basically, concludes with either an engulfing candle or a rejection candle, and that we can definitely see that there on that 4-hour chart, that's what we have there, okay? The price has rallied up there, but actually we can see it's just dropped and fallen away there, and we're looking to see, will it break that kind of 126.60 area that we've talked about? I'll talk a little bit more about that tomorrow, because if it does, well then then if I just zoom out a little bit, then we're looking at actually price sort of moving its way back down to these kind of previous lows here. I'll be looking at, if I just draw on a level there, just be looking at around about, I'll be saying 125. Okay, just put it in there. I'll be looking at and saying, if price does break down, then 125 down here would be the next area from about 126.60 to 125. So there's about 160 pips of move down there if that actually move does want to show itself up. But invariably, what I think we'll see is that we'll see a fair bit of shenanigans here on sterling, simply because, of course, we're having a bit of a political upheaval there at the moment after last night and with the announcement of Theresa May's resignation. So I will talk more about this tomorrow at the real-time daily trading idea session. But I just want to show that, as I said, when a good trend leaps off the chart at you, when you can see that, that's what we do, and we want to be trading in line with that chart. We can see here for the euro sterling, okay, what we've had there this month is price had a bit of a, it's almost like we've had a level of support there, okay. Call that not surprisingly. That's actually 85. We can see that price is just, every time it got down to 85, it bounced, and last time then we bounced, and you can see that yourself. Okay, price is actually inside the daily sort of the daily between the daily and 50. Okay, so we're not particularly like it in that sense, but you can see for yourself that that has just been pretty much one way traffic. And if I go down to the 4-hourly chart, we can see that is actually what occurred there. Okay, that 4-hourly chart there has just moved itself up there very, very nicely. And now I'm looking at, well, actually what's happening here. Okay, we're getting, you can see that you've got fractals there. Okay, we've tried to push up, had a little bit of a false breakout, and now price is just working out where is it going to go from here in terms of the euro against the sterling. Not unsurprisingly, we've seen the pound against the yen has been quite similar to the pretty much everyone in the dollar, in the sense that everyone in the sterling, in that we've had just really for the last month, we've just been in a pretty clear downtrend. And as I said, good trends leap off the chart. You don't need to go aggressively hunting for them. Okay, the good ones will leap off the chart at you, and a bit like all the others, what we can see is that there's just effectively been kind of sterling has been in a pretty sorry state. We can see how price react. Price did have a reaction here, around about that 140 area. Okay, 140, 140, 50 area. We can see those previous levels. It had a bit of a reaction there before it's continued down. And now what I'll be looking at is, just going to draw in the 140 number. Okay, big round number there. What I'm going to be interested to see is, we can see price pulled back up a bit, but then actually, the 20-period moving average acted as significant, resistance again, and invariably prices just continue to rejoin, and that's what we're seeing this morning as we see a reaction to the sort of Brexit Party results overnight. So you can look at that pretty much all across the board there. Right, it's all pretty much the same pattern. You can just see sterling there just been in one-way traffic, hasn't it, ladies and gentlemen? You can see that going down to the 4-hour chart. Okay, that's what we've just been looking at. It's just it's just exactly the sort of look that we've been having at. As I said, good trends leap off the chart. You don't need to go chasing them, or basically chasing them everywhere. It's a case of when you see good trends, they will be there, and it's about finding a way to to join them, whether it be with trading a pin bar rejection, okay, on a pullback, or if there is a an inside bar, or if there's a 3-bar reversal occurring like there was there. Okay, just being able to sort of have a bit of patience and wait to sort of get you an opportunity to join that trend. So there you go, ladies and gentlemen. Sadly, we've run out a little bit of time today. Okay, as always, the time flies, but I hope you found that useful. As I said, the next we're going to draw to a close over the next couple of weeks. So what we'll be looking at is we're doing sort of the back 5 next week, okay, with a final sort of review on in a couple of weeks' time, to sort of draw a conclusion to our Mastering the 4Ms trading webinar series. I hope you found that useful. As always, I wish you the best of success in your own trading, and I look forward to seeing you join me next week for the last couple of our webinar series. Thanks very much.